Hi, everyone, and welcome to Cultivating Business. I'm Kevin McLaughlin, Managing Director with Centri Consulting, where I lead our cannabis practice. This is our first episode of what will be a monthly series where I speak with folks within the cannabis industry to get their insights, thoughts, and inputs on an industry and market that continues to develop. Our first guest joining us today is Scott Ogur. Scott is currently the co-founder and principal at West Fourth Holdings, and has held various positions within the cannabis industry over the years. Scott, thanks for joining us.
Good afternoon, Kevin, and thank you so much for having me. It's an honor to be part of the inaugural podcast.
Absolutely, this is we're excited to have you, and you should be honored here to be the first guest here on our show.
I am indeed.
All right, let's jump right in here. I think for everybody, it would be helpful if you could just tell us a little bit about your background and experience.
Sure. So I started my career in more traditional accounting roles and then went back for my MBA at New York University in 1998. That's where I met my now business partner, Zachary Venegas. He and I joined the JP Morgan Private Bank, and after a few years, started our entrepreneurial journey when Zach started a venture capital firm called Scimitar in 2003, and I was the first guy in the door. We focused primarily on frontier markets before that was even a term, with investments ranging from funding the first internet service provider in the Kurdish region of Iraq to acquiring Corning's venture portfolio in a secondary transaction. In the nearly 20 years since we began, we've transitioned from the investor side to the operator entrepreneur side, including businesses in technology, sports entertainment, security, and cannabis. We've now launched a firm to offer our services to small and medium-sized enterprises that require everything from turnarounds to re-energizing growth.
Awesome. I mean, that's fits right into to some of the needs here in cannabis. Tell us a little bit about your journey within the cannabis space specifically over the years here.
Sure. So my journey in the cannabis industry started about 10 years ago when one of the entrepreneurs that we had backed while we were at Scimitar asked me to assist one of Colorado's vertically integrated cannabis companies with essentially outsourced CFO services. And in the 6 or so months that I was in that role, I would often discuss with Zach the characteristics of the US legal cannabis industry and how it was essentially a frontier market with shifting legal and regulatory landscapes, operational challenges, and difficulty accessing capital, especially in those early days. Then in 2015, Zach and I formed Helix TCS, which we later changed the name to Helix Technologies. The TCS stood for Technology, Compliance, and Security. We started with a security business in Colorado and grew it both organically and through acquisitions until we had become the clear leader in the Colorado security market for the cannabis industry, driving a few of our competitors out of business along the way. Within about 18 months of starting the company, we acquired Colorado's oldest wholesale marketplace. And then in mid-2018, we closed on what was a transformative merger for us with BioTrack THC, which is one of the leaders in the seed-to-sale software segment of the cannabis industry. BioTrack has delivered its services, its software to governments, dispensaries, growers for more than a decade now. But when we acquired BioTrack, it was generating negative EBITDA of about $800,000 a year. In 2020, that business unit of Helix generated almost $3 million of positive EBITDA, which was driven by, obviously growth initiatives, but operational efficiencies and cultural improvements that Zach and I implemented. Fast forward to March of 2021, last year, and following the disposition of the Helix physical security business, we merged Helix with an entity that was formed by the family behind WebMD and created Forian, which is now listed on the NASDAQ. Forian sort of stands at the crossroads between traditional pharmaceutical data and medical cannabis data. For me, I was on the board of Forian for almost a year, and Zach and I were strategic advisors for that first 12 months following the transaction, which took us to the essentially March of this year. And then in the spring, as you mentioned, we formed Westforth Holdings, and our first client was Bell Rock Brands, which many may know is the parent company of Mary's Medicinals and Dixie Brands. I'm currently the interim CFO of Bell Rock, and Zach is the chief restructuring officer.
And you've had the opportunity to work with both public and private companies in cannabis. There's been a lot of discussion recently with the Canopy deal and a push to really help surge those capital markets, if you will. But from your perspective, what are some of the challenges, differentiating factors in bringing a private versus public company in cannabis in today's environment?
Sure. So I think to a large degree, the answer to that question starts with whether we're talking about a plant touching or a non-plant touching company. For the non-plant touching companies like Helix was and Forian is, most of the burden of being public is similar to any other public company. The quarterly and annual SEC reporting that obviously Centri is very familiar with, PCAOB audits, et cetera. But the potential reward includes access to investors on the NASDAQ and the capital and liquidity that they may provide. For the licensed cannabis companies, the OTC and the Canadian Stock Exchange remain the only true options for listing the stocks. These markets are far less liquid than the US exchanges, and often the only capital available to companies on these markets can be quite predatory. The large MSOs have mostly managed to reach what I call sort of escape velocity, and they trade with reasonable liquidity. But the majority of the cannabis companies on the OTC would fall into the sort of dreaded penny stock classification. Also, I think it's important to consider that managing the stock and managing the company are two very different tasks for executives at public companies. For licensed companies that are public, managing the company comes with additional challenges. There are still a number of states that require licensed cannabis companies to be able to report all owners, which makes it impossible for public companies to meet this obligation. But they still want to operate in these states, and so they do all of these legal and accounting gymnastics like licensing arrangements or intellectual property agreements or reverse royalties with third-party companies. Often, these third-party companies are owned by executives, directors, or large shareholders of the public companies, which then results, of course, in related party transactions and the necessary disclosures. But in any event, there's an additional accounting, legal, and management burden that is not trivial.
Absolutely, all good, good points there, and things to consider here as everything evolves and the capital markets hopefully come back a little bit here. A topic that I think will have some great perspective on and interested to hear is about restructuring and how that's going to impact the industry. Over the past couple of weeks here, a few prominent cannabis companies, Flower One and Leafly, have announced different types of restructuring plans. And based off of the current market conditions, the expectation that there will likely be more cannabis businesses that follow suit here. What are some challenges that you see for restructuring workouts within cannabis? And to the extent you feel comfortable, what's advice you'd provide to cannabis businesses that are considering some type of restructuring in the near term?
So, I think there's two primary aspects to that first question: financial and operational. Financial restructuring for licensed cannabis companies in the US is challenging since there's no option to work things out under the cover of US bankruptcy law. Therefore, companies that are burdened with too much debt either have to engage with creditors cooperatively or essentially engage in a high stakes game of chicken with them. The practical reality for lenders to this industry is that their ability to foreclose on licensed operations is virtually non-existent given the state license transfer processes that would need to be traversed. The operational aspect of restructuring is somewhat more straightforward, but finding the expertise to execute a restructuring is easier said than done. A successful restructuring process involves attention to the obvious aspects of cost cutting, but also the human capital and leadership management that often are not properly implemented. Given the relative youth of this industry, many managers and employees are not prepared for the changes and difficult decisions that must be made, especially that for years there was a seemingly unending access to capital that the industry had benefited from. I think it's also worth noting that in many other industries, restructuring often includes a consolidation of operations to maximize efficiency and reduce fixed costs. Since cannabis can't cross state lines in the U.S. today, licensed companies, just don't have that arrow in their quiver. Regarding your question about advice to companies in this situation, look, at the risk of sounding a little self-serving here, I would strongly encourage them to identify and engage expertise from outside their organizations. There are a number of benefits to this approach. Obviously, just a fresh set of eyes to evaluate the existing operations. I think it's important to come in with no preconceived notions and sort of there's no sacred cows. And it's just not reasonable to ask an existing employee or executive to come at a situation from that perspective. And look, I think the reality is it's much easier for an outsider to be the bad cop when tough decisions, especially around personnel, have to be made for the health of the organization broadly. There's obviously a caveat to this approach in that the outsider has to understand and know enough about either the cannabis industry or at least that company's segment of the industry to properly analyze and diagnose the issues and then recommend effective and implementable solutions.
No, all good insights there. I think this is going to be a topic that will continue to be at the forefront here over the next year or so. Very helpful getting that background from you, as I know you've worked through this, in your experience, and then obviously within the cannabis industry have some expertise and background as well. So this is a topic I think we'll continue to hear about over the near term here.
Agreed. Very timely for better or worse.
Exactly. Yep. I know you don't have a crystal ball, but what's your outlook in cannabis over the next 3 to 5 years?
Yeah. Well, certainly if I did have a crystal ball, I would just invest accordingly and sit back and enjoy the ride. But since it doesn't seem to be working right now, I can't use it. I think it's helpful to sort of rewind the clock 5 years ago. And if you had asked me that same question, I would have, if I'm being honest, I would have predicted that by now we would have had some form of federal legalization. And of course, with the benefit of hindsight, it would have been 100% wrong. So, keep that in mind, I suppose. But I also think it's important to think about where we were 5 years ago when, only roughly 50% of US states had some form of legal cannabis, mainly medical, of course. The US economy had experienced 7 straight years of the sort of Goldilocks GDP growth of plus or minus 2%. Of course, the political winds were blowing a certain way. And there was just no practical pressure for federal legalization to occur at that time. Where we sit today, we've got 75% of US states with some form of legal cannabis, including, certain so-called red states that I probably wouldn't have predicted 5 years ago. The economy obviously is floundering. State and federal budgets are under tremendous pressure. The opioid settlement and risks of that class of pharmaceuticals provide further tailwinds for the cannabis industry. So looking out 5 years from now, it certainly feels to me like federal rescheduling of medical cannabis at least is a good bet, if not full legalization. I think the industry is likely to continue to mature. As I mentioned earlier, I think we've gone from frontier market to emerging market. And I think by the end of the decade, it'll be a developed market. And so the one natural result of that, I think, will be that consolidation will continue to be the order of the day. the multi-state operators are likely to continue gaining market share over the so-called mom and pops. Federal legalization would only support this trend as the economies of scale that, at least across state lines, are not currently available to licensed cannabis companies would now be in play. And the last piece of the puzzle, I think that's shouldn't be underestimated, is that these MSOs would then be able to uplist onto the national exchanges in the US and gain access to more institutional capital than they can currently tap into now.
Absolutely, all really good points there, and there's just a lot of uncertainty on that. I agree. I think most folks would have thought we would have been a little closer to federal legalization at this point if you asked them 3 years ago. But I think as you make some of these steps, right, with whether it's banking or whatnot, that just feeds into the reality that maybe we're a little closer to legal federalization, because right now there's just a lot of uncertainty. I don't think anyone quite knows where that's headed at this point in time.
True.
I want to end on an area and a topic that I know you've spent a lot of time and worked through over the years, specific to your experience in cannabis, obviously. So, cannabis companies, they have challenges as they're attempting to scale and really grow the business. In your experience, how should executive management balance the importance of revenue growth versus profitability in an industry like cannabis?
Sure. I think that's certainly the multi-million-dollar question, isn't it? I have a college buddy who is a serial entrepreneur, and we used to debate this question years ago in more traditional industries. To a large extent, I think the answer to that question can actually be summarized with a different question. Can the company in question reasonably expect to access capital at higher valuations for the next 5 years or not? My fellow Bucknell alum was able to answer that question with a resounding yes, and over the past decade generated meaningful returns for his investors and substantial wealth for himself. But with that as a background and the caveat that I still refer to my early training at Price Waterhouse, which taught me to always apply healthy professional skepticism, it's difficult for me to look a cannabis executive in the eye and tell them that they can reasonably expect to have access to capital at higher valuations in this environment, and probably for at least another year to year and a half. So to me, the logical conclusion, which we also implemented at Helix in 2020, is to get profitable so that you never have to rely on outside capital to stay in business. The adage that you can access capital when you don't need it, but not always when you do, often rings very true. 5 years ago, the industry had great access to capital, but keep in mind the total addressable market was also rapidly growing as new states and new licenses in existing states were being put into play every year. So I'm not suggesting that the US cannabis industry is saturated, but I think it's fair to say it's far closer to saturation now than it was 5 years ago. When an industry isn't growing rapidly, chasing revenue growth at the expense of profitability, to me, makes far less sense. And it's advisable to strengthen your company's balance sheet and cash flow statement and be ready to pounce when opportunity knocks and good assets become available because your competitors aren't properly managing their financial health.
That's some good food for thought there. And to your point, I think at this moment right now where the market's at, there are assets that have some value that, compared to a couple years ago where valuations were probably higher than they should have been now they're a little bit lower. So there is opportunity in a market like that, to your point.
Exactly.
Well, hey, this is all the time we have for today. I really appreciate you joining us, Scott. Really great insights, thoughts, and hopefully we can do this again sometime soon.
That sounds great. Thanks so much for having me on, Kevin, and good luck with the series.
Appreciate it. Thanks, Scott.
All right. Take care.